Fitch's Fixed Interest podcast delivers the analyst insights and updates you need to stay ahead in a rapidly evolving market. From global macroeconomic trends to sovereign credit developments to regulatory and political changes.
Welcome to the next edition of Fixed Interest, where we are going to be discussing Argentina. My name is Shetty, and I'm a managing director and the head of Americas and Asia Sovereign Ratings at Fitch. And today I'm joined by Todd Martinez, who's the co-head of the Americas and also the primary analyst for Argentina. So by way of background, Argentina is currently rated at CCC+. We upgraded the rating in May from CCC to CCC+. That reflected the new IMF program that Argentina got, the liberalization of the FX market also earlier this year, and also the progress on disinflation and fiscal consolidation. Now, Argentina, in our view, has been a turnaround story from a rating perspective already. Recall that we had a rating of CC when President Milei took office. All that said, the last few months have been quite bumpy, especially after the Buenos Aires province elections, which triggered significant market volatility and weakness and required the U.S. intervention in the FX market, and also a swap line from the U.S. Treasury to the central bank, all to calm investor jitters. But the October 26th midterm elections delivered a stronger than expected performance for President Milei's party and his allies. That's helped market sentiment and performance, and participants are now turning constructive again on Argentina as the prospects for policy adjustments and reforms improve. So it's a great time to have this conversation. So let's get directly into it, Todd. Let's really start with the midterm elections. So what happened, especially in the light of poor showing of Milei's party performance in the Buenos Aires province vote in September?
Thanks, Shelly. Happy to be here talking about Argentina. And there's certainly a lot changing in Argentina in the era of Javier Milei, but one thing that is very much the same is that Argentina is never dull, and it's been a roller coaster of a year. So let's just back up a little bit. Javier came into 2025 on a strong note after a pretty successful 2024, but some setbacks accumulated over the course of the year. There were some economic setbacks, even though his disinflation achievement remained intact. I think voters internalized that and were shifting their attention to economic growth and job opportunities, which were disappointing. There were some PR setbacks, namely Milei's ill-fated promotion of a cryptocurrency and some other negative headlines affecting his team. And there were some legislative setbacks, tensions with Congress, some measures that he vetoed, but then those vetoes were overturned. So all of this kind of culminated in the Buenos Aires province election in September, where his party had a very poor showing, and that triggered a market panic in the financial sector. The government had to go to the U.S. for extraordinary support. And while that was good news, it sort of did seem like a Hail Mary sort of play and in a situation that wasn't entirely under control. But then in October, things changed dramatically. Milei's party got 40% of the votes. That might not seem very high since it's below 50%, but it's very good in the Argentine context. It's very good for a new political movement, and it was vastly better than expected. So markets are taking this very positively, I think for a few reasons. First of all, Milei is going to significantly increase his representation in Congress with this. In the lower house, his share of seats will go up from 28% to 40%. And in the Senate, they'll go up from 18% to 33%. So not an outright majority, but still a very important gains. And it's going to give him enough to kind of protect his veto power, block any attempts to overturn vetoes. And it's also a major symbolic victory for him that's going to give him a lot of political capital. He won't be on defense in the next year, just vetoing populist measures. He'll be on offense, advancing his liberal economic agenda. But important to probably stay cautious here. Even though this election outcome was the one the markets wanted, the fact that markets were so acutely sensitive to all these election developments, as you highlighted, shows how there's still a lot of fragility in this country. Turnout was not that high, so there are some lingering questions about how much of a mandate this really was for Milei versus a rejection of his opponents. And, Milei didn't really take a steamroller over traditional politics. He's still going to have to work with the system, and there's always a risk for some setbacks and disappointment. But all in all, this is great news and sort of the exactly the positive catalyst that a lot we're hoping for.
Okay, thanks, Todd. So obviously the markets have liked the results. It's really been better than expected midterm election result, as you were saying. But what are the implications of all of this for economic policy when you think about fiscal, monetary, and FX policies, and also from a reform perspective, and thinking about microeconomic reforms? Which reforms do you think that the administration will now prioritize?
Yeah, so I think an important point to make first is that Milei did achieve quite a bit in his first 2 years, but a lot of what he achieved was stuff that he did through his executive powers. And he did have some legislative achievements, but it was mostly stuff he could do thanks to, executive powers over some fiscal policy and of course, over monetary and FX policy. This next stage of his program is probably going to need to involve a lot more buy-in from Congress and reforms. So, what can we expect? I think on the fiscal front, there is maybe this impression that the fiscal adjustment's already out of the way, but there's actually still quite a bit of belt tightening to do. A lot of the fiscal adjustment achieved so far was due to transitory effects. Inflation at first helped kind of erode some of the spending in real terms, but indexation is kind of reverting those gains. And there were some tax measures intended to be temporary that have gone away. And there are these dramatic cuts to capex that aren't sustainable forever. So Milei is going to need to roll out more durable fiscal consolidation measures as kind of these transitory benefits go away. But he's making progress on that, namely by rolling back energy subsidies. And I think this election outcome will give him a good negotiating position in the budget for next year. He might have to give a little, namely to provincial governors in terms of higher spending to encourage their support. But the fiscal anchor is very important to Milei, and we think it's in better conditions to remain that way now. On microeconomic reforms, just maybe two big ones that are likely to come out of the gate quickly: a labor reform to address Argentina's very onerous labor code, informalities high, and progress on this could address that important issue. And a tax reform. I think the idea here is not to cut taxes, but to simplify what is a very complex system and maybe work with provinces to get rid of these particularly distortive taxes like the turnover tax that has this cascading effect. And then quickly on monetary FX policy, this is where there's still a lot of question marks. A new framework was rolled out this year where the government let the currency float more and got rid of capital controls. But part of that involved letting interest rates get extremely high to avoid the peso depreciating too much. And that created a lot of problems for businesses and is not probably sustainable for the debt dynamics. So, already now we're seeing that liquidity is being increased and interest rates are coming down, but, the government may have to take some more holistic changes in the monetary and FX framework to achieve something more sustainable. And there are some lingering elements of the capital controls that we expect they'll want to address soon.
Okay, maybe let's talk a little bit about Argentina's Achilles heel, right, which is really its weak international reserves position. So, do you really expect the focus now to shift towards rebuilding international reserves now that the vulnerabilities around weak FX buffers was yet again exposed just before the midterm elections? And how do you see the prospects overall for reserve accumulation in Argentina?
Yeah, as you say, Shelly, this is clearly the weak spot in what's otherwise been a pretty successful economic adjustment program. Milei inherited reserves around 22 billion, and now they're 39 billion US dollars. But almost all of that improvement is due to the borrowing from the IMF and other multilaterals. And almost all of that stock corresponds to FX liabilities of the central bank. This China swap that's not really usable, reserve requirements of the banks, these BOPREAL securities that the central bank has been issuing. So the central bank doesn't really have net reserves of its own. That means if it sells reserves to help to defend the exchange rate, it's really using someone else's dollars. And what's the problem, Ben? Until now, the government's really relied on a strong peso as a means of achieving its disinflation goals. That was the case when they had a crawling peg until April, and it's also been the case after. Even as the pesos floated more, they've still taken a lot of action to try to keep it strong. So we do expect the government's going to try to work a lot harder to build reserves going forward, but it's not clear how it's going to do it. There's really two ways it could do it. It could adopt some new currency regime, probably a weaker peso that's much more conducive to trade flows and and trade inflows and getting reserves up that way. But Malay's recently ruled this out once again, so it seems like they may be going for the other strategy that relies more on attracting FDI, attracting other capital inflows from non-residents, or convincing Argentines to repatriate their assets, and maybe recovering market access. Because the government's been able to keep reserves sort of stable even while it's paying off its debt. But if it didn't need to pay off debt, if it could refinance it, then that could help reserves grow. And I guess one final point on the U.S. swap facility from the U.S. Treasury. We don't see this as a perfect substitute to building reserves. We don't know its terms or conditions, and we don't know if it's something that can last no matter who each president in each country is. But it's still good news. It's something that could help support confidence and smoothen the transition of any policy changes.
All right. So maybe let's move from, Argentina's assets position to liability position and debt service. I mean, I think both of us know that foreign currency debt service is going to be rising next year, both for bonds and even for multilaterals. So how do you see the chances of Argentina actually returning to international capital markets in the coming year to refinance some of these upcoming debt maturities?
Yeah, Argentina is certainly facing a wall of debt repayments created by its 2022 bond restructuring and the IMF programs it's taken out. And yeah, the upcoming debt service, it really isn't that high if you measure it as a share of GDP, but it's very high if you measure it as a share of reserves. They have, you know, 8.4 billion coming due next year, rising to 11 billion. That's just on the foreign currency bonds. And, that's a lot given reserves, like I said earlier, are near zero in net terms. So far it's been able to make these debt repayments by dipping into reserves, and it has some options to muddle through, but eventually it really does need to refinance this. So I think this is the big question going into 2026 is what's its plan to return to markets. Spreads have fallen dramatically after the elections. Argentina maybe could issue at 10% if it wanted to do so today. That's still on the high side, but maybe some positive catalysts could bring those spreads down. And maybe before returning to capital markets, they may instead try to go to commercial banks. There's been talk of some sort of debt for education swap that would involve banks. So we're not entirely sure what the return to markets when that'll happen and what it'll look like. But, if it does happen, it's certainly going to be a big milestone and something that could move our rating.
Okay, so maybe finally then let's talk about Argentina's ratings and, what does all of that we've discussed so far mean for Argentina's ratings? I mean, as I noted earlier, clearly Argentina has successfully climbed the ladder in the triple C category, but what does it take for Argentina to move back into the B category? And also on the other hand, what are the risks that we should be monitoring? And, do you see scenarios where ratings could be downgraded in Argentina?
Yeah, so at triple C plus, Argentina is one step away from the B category. And what would it take to get there? Two main things. Reserve accumulation. It's nice that Argentina has these backstops from the IMF and now the US Treasury. But to really overcome its vulnerabilities and improve its repayment capacity, Argentina needs to build its own genuine reserves. And the other thing is market access. If Argentina can tap markets at affordable rates, or just demonstrate that it would be able to do so, that would greatly improve the external liquidity picture for the coming years. And I think those two triggers are very much intertwined. If Argentina can build reserves, that might help improve their market access. That in turn would also help the reserves, in sort of a virtuous cycle. And what could move the rating down? If there are any new setbacks like we saw in September, political policies, confidence that lead to a new bleeding of reserves or make market access more remote, that could be negative. If there's any sort of liability management exercise that's done from a position of weakness rather than strength, that's something we might consider a distressed debt exchange. In other words, an exchange that even if it's voluntary, maybe people only agreed to it because they were worried about the sovereign's ability to pay otherwise. So those are risks we can't rule out yet. Like I said, still a lot of question marks around FX policy and reserve accumulation. But clearly this election outcome and the U.S. support is moving Argentina away from those risks. And, we'll see. Argentina is a place where things can happen very quickly, even in December. So we'll be watching things very closely in the coming month for any news that could affect the rating.
Great. So that's a wrap for us. Thanks a lot, Todd, for your insight. Thank you for listening. And for more on Argentina, you can access our research on our website, fitchratings.com. Thank you.
Subscribe to Fixed Interests wherever you get your podcasts.